Let's just talk about what they issued and how oversubscribed that debt issue was.
Well, thank you very much. There's no two ways about it. It was a blockbuster. These are numbers we have never seen in the sterling market before. Just to give viewers some kind of backdrop, less than a year ago, we were talking about whether the sterling market is becoming irrelevant and whether investors should be looking elsewhere. Comes now Alphabet, and then we start seeing something like £30 billion of demand shortly before coming on air. That was the latest. So we are talking about massive demand across a number of markets that these companies haven't tapped before. That was the first time Alphabet, for example, is coming on the sterling market, and it's been something that we may not see again for a while, unless another hyperscaler, of course, comes forward and starts issuing big as well.
For those on the outside looking in who aren't familiar with the sterling debt market, specifically the credit market, and more broadly the sovereign debt market too, what is it that's unique about the sterling debt market that makes it the natural place to make an issue with a duration this long?
Yes, and we'll get to that because today was actually rather iconic. In very few, it's mostly insurance providers and pension funds. They have very long-dated liabilities. They need to cover that with very long-dated bonds. So this is why you tend to see issues more than 10 years long coming to the market. But what we have seen from Alphabet, and it's a bond that everyone's talking about, is the 100-year bond that they brought to the market. This is a bet that Alphabet will be around in one way, shape or form for the next 100 years to pay you interest every single year and mature, well after we've left this world.
Is this a good template, Tasos, for other hyperscalers that have to sell debt, given that it seems like there is ample demand from the pension funds and the insurance companies in the UK for something like this? In other words, is Europe going to be an increasing destination to finance US hyperscaler needs?
Yes, and everyone's ready for it, and everyone's willing to buy that as well. We've had 32 weeks of consecutive funds into Euro investment grade funds. Investment managers here are flush with cash. They want supply. There is some supply, obviously, from domestic players, but the amount of capex that we want to see from hyperscalers is well beyond what you get from the entire debt market here. So all of this is going to be well received, and actually people have already started talking about who could potentially be the next hyperscaler to come to the market.
So there's a real question here, Tasos, going forward about how much we end up with a European market that has lots of money that starts looking at U.S. tech companies as an alternative to government debt in the United Kingdom and, frankly, to Europe more broadly. I mean, how are you seeing this priced? Do we have any sense of that?
People have already started talking about the implications of it, because before this issuance, both Alphabet and previous issuances from other hyperscalers, we tended to view US and European credit as silos, and then thinking of the US being more linked to the performance of the US economy, for example, and Europe being more linked to the performance of the European economy. But now they're becoming much more merged. Now that the names that you start seeing in the market, we had lots of issuance from other US companies in Europe last year, but the sheer volume that we're going to see from hyperscalers are going to bring those two economies together. So suddenly, as a European credit manager, you have exposure to both the European cycle and the US cycle, which is something that for many people is going to be the first time they have to do it.